is Jackie Dietrich, and we're here from NP Inc. We're your non-QM preferred lender. I'm also here with Dan Scrocco, he's our SVP, and Oberti Delgado, he's your loan officer during a look-through, and he works through Supreme Lending. We're going to do some training today on some of our non-QM products, kind of the most popular ones that we run into, ones that we think you guys can really benefit from, on the purchase side of things. We'll go through a little bit of kind of who we are, what we do, and then we'll get into the products. So NP Inc., we've been in the business for about 20 years, 25 years or so. We got into non-QM probably in the last 5 or so?
Yep.
So we've grown rapidly. We're really starting to get our name on the map. As you can see, we're licensed in about 44 to 46 of the 50 states. Our mission here is really just to grow this non-QM sector. We really we found a niche in what we do. Our service is top notch. We can get loans done fairly quickly, and we really wanted to implement this product into basically nationally, as far as just getting it out there and just making sure that everyone knew about it. So like I said, our footprint has grown tremendously over the last, probably since COVID, I would say, is really where we saw an uptick in what we've been doing. So we're excited to be here today, and we just want to tell you guys a little bit more about our products. So we're going to kind of get into kind of our niche-y stuff first. Dan will kind of go through, kind of what sets us apart from others, kind of some stuff that we do that others don't. And then, like I said, we'll kind of get into more of our product review.
So on a few of our niches, recently we found a lot of people, since the market has moved and changed, have decided to try to get into non-QM. And since they never really, were doing it before, it's new to them. So we found it was a little more difficult for them to understand. So one of the things that we did was we rolled out what we call an express product. So basically you could take our Select Prime Plus product or our Select Prime product, and you could actually send in your bank statements, for example, to us. Within 2 hours, we'll give you the income. You can plug the income into your DU or DO. You run the DU. Those are your conditions. So it makes it very simple. You could follow the DU. There's a couple of tiny overlays, like we would never do a DTI over 50, for example, where DU may give you that approval.
That question, sorry to cut you off. So who would this?
It's not like a simple approval.
Yeah, you could run it through DU, and that would be your approval. You still have to verify their self-employment and if it's a bank statement deal and how long they've been self-employed. If you're closing a non-owner in an LLC, you still need the LLC docs, which DU wouldn't be able to give you that information. But the general conditions, you just follow the DU.
What would be a perfect scenario for this?
You're doing a $2 million purchase at 90 LTV for someone self-employed.
Self-employed.
So you would send in the bank statements. Our desk gives you the income, the monthly income, within 2 hours, and then you can run your own desktop approval, and you're going to get an approved ineligible, for example, because it's over the Fannie Mae loan limit, right? But it'll be an approved ineligible. We accept that. You just follow those conditions.
And that's it.
That's it. Now, here's the benefits. So if you were going to do a 90% LTV loan with us and do it on our manual underwrite, we would require, and you had a renter, we would require 12 months canceled rent checks if it was a private party rental VOR. If you run it through DU, the DU doesn't ask you for canceled rent checks, right? So there's an advantage to do so. If you're doing a $2 million 90% loan, at that loan size, we would require 12 months reserves. But the DU may tell you 3 months reserves, right?
It's basically whatever the DU
So the DU is going to give you a couple of advantages that maybe by doing a manual underwrite, we wouldn't be able to do. Now, that doesn't mean if you get a reject on your DU that the loan is dead. We will still do a manual underwrite. It's just you're going to have the reserves, and you're going to have the canceled checks on a private party VOR.
More conditions.
Yeah, it's just a little more conditions.
Typically, how long does this take to close? What would you say?
Honestly,
From start to
it depends on the customer. Some of the customers that we have that know our system, know our guides, we close loans in 20 days, and that's including ordering the appraisals. You know, there's some states where appraisal times are dragged out. Texas, for example, is terrible. California, Oregon's horrible.
What about here in Florida? What do you think?
Florida, we're very quick.
Yeah, they are
And in Florida, we have, you can order the appraisal through our appraisal desk. You could choose any of the AMCs and just let them know, I'd rather use this.
So you get to choose the
You get to choose the AMC.
Wow.
If you decide, and we have a list of probably 20 that you could choose from. There's a few we recommend only because we may know the owners, and so what'll happen is you need a rush, and he makes sure you get a rush, that kind of thing.
That's good.
So, but yeah, the DSCR loans, for example, we do not follow TRID. So if you have a DSCR loan, and let's say you were trying to do a Fannie Mae loan and they didn't qualify, so you're going to flip it to a DSCR, or a non-owner. We would take the transferred appraisal, right? And we've closed those DSCR loans in 7 days.
Now,
So
what's a DSCR loan?
a debt service coverage loan.
Got it.
So you have a borrower that we don't use income. We don't use, what we use is the 1007 from the appraisal on the purchase, and we offset that against the actual payment. And as long as that DSCR ratio, which is 1% or greater, you could get the max LTV,
Very nice.
and then which is up to 80%.
So that's on non-owners. So if the rental, if it says it's $2,000 a month and then the pity is $2,000, they equal each other out. They're one and one. That's a deal that you can get approved easily as a DSCR. We don't need to see income. We don't need to see employment or anything like that.
And we'll also do those, if it's below one, we'll do it. There's just an LTV reduction.
Perfect.
So, and this is one more thing to remember on the DSCR. That is considered a commercial loan. So that's why we do not have to follow TRID. So if you have, let's say your debt service coverage ratio comes in at 0.8 and you need 1 to get the LTV you want, right? We will, if you do it interest only, we'll calculate the payment and the ratio using the interest only payment. So that's a way to get you more LTV if it's close.
Perfect.
Okay? Another niche, which I just actually mentioned, is most lenders will do a 90 bank statement deal to $1.5 million. We go to $2 million. So that's a nice niche for some of the larger loans. We also offer an 18-month self-employed product. So all of our competition that I could think of requires 24 months self-employed. So let's say you had someone that owned a restaurant, and it was a family business. The son managed it. The parents passed away. They left them the restaurant. We would do that loan with 18 months
So
self-employed.
basically, anything non-QM, like conventional FHA, that they can't get done, we'll send it to you.
Of course.
Yep.
And most of them, a lot of times, if you send to our scenario desk or to Jackie or exactly what the client's trying to accomplish, we could find a way with all of our products how to make a loan work. I always say if you have 2 of 3 items, I can get your loan done. If they have a lot of money, if they have good credit, right?
What is the minimum credit?
Our minimum credit score is 600 right now. We were at 580, we just raised it. But here's something to think about. We always use the primary wage earner. So if you have a husband and a wife, and the wife is self-employed and the husband is a W-2 employee somewhere. So the husband makes $75,000 a year, and the wife is self-employed and she's doing bank statements, right? We would allow that. The wife has a 750 credit score. The husband has a 540 credit score. If you were going to try to do that loan with Fannie, they would take the lower of the 2 credit scores, correct?
Right.
With us, we take the primary wage earner. So the wife makes more money, she's self-employed, so you would grade and price that loan off of her 750, and we don't care that he has a 540 score.
Wow.
We would use his income.
You would use his income. So the credit score wouldn't really matter at that point because
Right.
750 beats the 540.
Right.
Qualifiers.
Now,
Correct.
if the husband made more than the wife, that's where you run into an issue
Right.
because we always take the primary wage earner.
It's the one who makes the most.
Right. And the tie goes to the better score. So if they
Make the same.
they own the business 50-50 together and she has a better score, which we would use her score.
Very nice.
If he's 51 and she's 49, again, you have to use his
And now
score.
you can mix the both. So you said you could use bank statements and do a W-2.
Right, sure. If he's a W-2 only employee, we would use his W-2s and bank statements, and we'd use her business bank statements, merge the incomes together,
Very nice.
and do the loan.
Yeah. Yeah, when you think of non-QM, don't think of bad credit. Our average credit score is probably around like 730, 740. It's just, there's a lot of self-employed people out there, a lot of people with unique income that we can make work. So don't think, oh, I need a 580, don't think 580 is non-QM. Like 700s are non-QM.
Yeah, most of our customers are self-employed. Most of the customers are, or let's say you're a W-2 employee and you want to go W-2s only because on your tax returns you have, other things that you wrote off or you had losses on, or so you don't want that to be shown, right? So that's where you go into the W-2 only type situation, and that they go non-QM. But most of our borrowers are actually self-employed, or it's DSCR loans. So of our production, we're about 40% bank statement loans, and we're about 40% non-owner loans. So the other 20% make up our ITIN product, our foreign nationals, some full doc deals that do or do not work, Fannie Mae. A lot of times it has to do with, the LTV they need. They're buying a property that, Fannie Mae doesn't do won't let them go that high in LTV, and neither do the jumbo lenders, for example. So even though it's full doc, it'll fall our way.
Can we talk about the I-10 loan really quick? Or
Sure.
Do you have a question? Jumbo? What is the max loan amount?
Our max today is $3.5 million. So sure, we can talk about the I-10 for a moment. So I got it memorized.
Yeah. But, all for, that way at least they can look at something.
So on our I-10 product, our I-10 borrowers are people that are on paper here illegally, right? But they are good citizens that pay their bills, file their taxes, and so forth. So we do not require an EAD card, right? We do not require, which is your work authorization, which a non-permanent resident alien would have, right? So these folks are not going to have an EAD card. They're going to have probably just an ID, which would be either their driver's license, or in some states are harder to get driver's license, or their passport. Now it has to be valid, so let's just say they're using their passport. It cannot be expired, okay? And what they've done is, a lot of times they're self-employed, many times they're self-employed. And they go and they get an ITIN number from the government, and they file their taxes. So Fannie Mae does not do them. Fannie Mae will allow you to close a loan with an ITIN number, but if you read the guidelines, the underwriter states that they have to verify that they're here legally. So, which means they would have to have an EAD card. Our borrowers do not have an EAD card, so it does not work. So our max LTV is 85. When the market got a little squirrely over the last 60 days with rates going nuts, we were doing 90s on them, but they were pricing really poorly in the securitizations
Would
that
you
we were
make an
doing.
exception at 90, 10%?
We'll go to 85 now.
Okay.
Just between all of us here, the market as of Friday has really settled down. I mean, I'm all over it. That's why I had to leave to make a call before, because
Yeah.
we're trading pools, and I'm signing LLPAs for securitizations. And anyway, so my guess is in the next 60 days, all the product that we kind of suspended, we didn't get rid of it, we suspended it because I knew it would settle down and come back. So that 90 will probably be back by June.
Yeah. To give you an idea, we went down to 80. Like, you know, if you would have asked me our max LTV a week ago, we would have told you 80. So good news.
Yeah, I moved it up
Yeah,
to
we're
85
moving
yesterday.
85. So that's things are going in the right direction, which is good to hear.
So and there's a lot of things that like $4 million. We used to go to $4 million on loans up until 2 weeks ago. But again, those larger loans were pricing poorly. So we're trying to stay competitive with our pricing and manage what's going on in the market every day.
Now, an ITIN loan, how fast is that? I mean, typically, how quick, how?
Most of our loans close in 30 days, us assuming the customer is on top of their stuff, right?
And ITIN loans no more complicated than any other loan, any full doc loan.
No, it's funny you mention that because prior to this big rate move that started in late January, most of our loans, the customers, because our rates didn't really move very much, right? So the customers they'd submit a loan, get a loan approval, and they're always trying to close their Fannie loans because they have locks, right? Well, so we would be begging them to send us the conditions, and they're like, oh, I'll get to it next week, I'll get to it next week. Well, all of a sudden when our rates started to move, now all of a sudden everybody's on top of it, and you can see us closing the loans in 30 days. So it really is the demeanor of the customer and the broker shop or lender that's sending us the business.
Perfect.
Deciphers that. Our turn times, even at month end, they always widen a bit, but we've never been more than 4 days on turn times ever.
Okay.
I've heard stories of some of our competition are 7 days just to get disclosures out. So, we're 24 hours on disclosures. We're 24 hours on conditions. At the end of the month, it might go to 48. We're 24 hours to get docs out.
So pretty
Yeah.
smooth for
Yeah.
non-QM.
Yeah.
Do you have any questions?
And then reserves are key for the ITINs. We do require reserves on all of them. And then 43 DTI is going to be your max. And we're not going to make an exception on that.
But we also offer bank statements for the self-employed. We offer options because you'll find, and we have found, customers that have used a Social Security number that is not accurate, that was not really theirs, to get a job, say, in their W-2. It seems pretty common. And what happens is we can't put that in a loan file, right? So we've given you other options of ways to show us his income without giving us that Social Security number.
So basically, any scenario that you guys have, excuse me, just send it your way, and you could tell us.
Right. So basically, let's say that your customer did do that, and they were W-2 somewhere. I can't see the pay stubs because it's going to have the Social Security number on it. I can't see the W-2s because the company puts the Social Security number on it. So what do? We get 2 years tax returns, right? Because they file their tax returns. And they file their tax returns under the ITIN number that they actually have. So we'll get the 2 years tax returns, and then we just get a fully completed VOE from the employer with the ITIN number on it, not the Social Security number. And we'll use that, and it's a 5% LTV reduction.
What happened with the residency?
I'm sorry?
What happened with the residency when they asked for the legal house?
She's asking about the residency, if they're legal.
Well, they'd have their ITIN
I don't-
number, then they'd have their
I
ID.
don't. We don't.
So we shouldn't have a residency.
We don't care.
issue.
We don't
care about
want their
any-
EAD card.
Yeah,
we don't
care
want.
about-
We just want a driver's license, and we want either a driver's license or a passport that's valid.
That's
So if the
ID.
passport is from, I don't know, Colombia, the passport's from Colombia, as long as it doesn't expire for 6 months after our loan closes, that's what you would use.
How much is the down payment for down credit?
Depending on the credit score and the credit depth, we do have a trade line requirement on that product. And you do have to pull the credit using the ITIN number, okay? but we'll go anywhere from 85 as a maximum LTV, so they would have to put a minimum of 15% down.
As of right now.
As of right now,
Yeah.
depending,
As of right now.
depending on their
720
credit score.
score typically.
Do
Yeah.
you need to have any minimum trade lines?
Yes, so they have to have 2 for 24 or 3 for 12. So the only 2 products that we have a trade line requirement are ITINs and foreign nationals. Everything else, we do not have a trade line requirement. It's if they have to have a credit score basically. So yeah, 2 credit scores. So we use the middle of 2, lower. The lower of 2, middle of 3. Sorry, thank you. So, and that's a little different because most of our competitors check trade lines too, right? And we do not. So, on all of our products except for ITIN and foreign nationals, it's just as long as they have a valid score, you're going to be able to do it.
Anything else? You guys have any questions? I think that's
So I want to make one more comment on ITIN, and then I could talk about the difference between an ITIN, a foreign national, and a non-permanent resident alien, briefly. So on an ITIN, if you have, which happens a lot, if you have one borrower who's a U.S. citizen, or one borrower who is DACA, and then we have another borrower that's actually ITIN, it still falls under ITIN. And that happens a lot. So it's funny because the DACA situation, does everybody know how people become DACA? Okay. So they have to actually file and they get an EAD card. So DACA is the only one, but it still falls under that program. But that's the only one that we will do that we need an EAD card for. If they're a DACA, right? So now, the non-permanent resident alien versus a foreign national versus an ITIN. So a non-permanent resident alien is someone that has a visa. They may have an H-1B visa, and there's a whole list of visas that we accept in our guides. But as an example, they'll have an H-1B visa, or I think they call it a P visa, which is for someone that's like a baseball player, an athlete, soccer player. They give them a visa, to come over. And then, so they'll get an EAD card, which is their work authorization. And we treat them like a regular U.S. citizen. They can do any of our products at any of our LTVs as long as they have U.S. credit, right? So they live here, they work here, they're treated like they're a green card holder or a U.S. citizen. Any product they can do, they'll fit. On a person that's a foreign national, they're going to live in another country, they're going to work in another country, they're just buying a property here in the U.S. as a non-owner occupied or Airbnb. So they may even use it, 3 weeks a year as a second home and then Airbnb it the rest of the time.
basically investment.
Right. So they're all investment. We will do them full doc, and we also will do them under the DSCR program we mentioned. So how do we do full doc when someone works and lives in Colombia, right?
The income's coming into the country.
Right. So that's what I will about to explain here. So if you're they're self-employed in Colombia. They own a soccer team. We get a letter from their CPA or equivalent that basically says Dan Scrocco owns whatever soccer team, and he's owned it as self-employed for the last 10 years. His income in what is the monetary in Colombia? Does anybody-
Is it pesos?
No.
No. Pesos?
Is it?
Yeah, is it?
In Colombia? Okay. So
Colombian pesos.
Colombian pesos. So he makes $1 million a year in Colombian pesos, which equates to $200,000 a year US, right? And in 2021, he made X. In 2022, he made Y. Or 2020, he made Y.
So only you need
A
a letter
letter
A letter
That's
from the-
from the
That's
council.
it.
from the CPA. His CPA or equivalent. They may not call them CPAs there.
CPA from this country.
No,
from
from Colombia.
Or whatever is equivalent to a
So,
CPA in
and the
Colombia.
only rule is I have to be able to go online and verify that this person is a CPA.
Financial.
So it's very it's full doc, and people get freaked out by hearing that, but it's very simple. So let's say he was a W-2 employee for that same soccer team we just mentioned. All you get is a written VOE from his employer that says the same thing. In 2021, Dan made X. In 2020, Dan made Y, and his year-to-date is X. And that's your income. So it's very, very simple.
And what's the loan you give to them?
So they can go to
30%?
30% down. They could do DSCR. They could actually do condotels down to a lot of them are popular here in Florida, especially like around Disney. They have to put a little more money down on a condotel, but we do a lot of them. And there's other banks around that do them, but they're so picky about, and they put them in their portfolio, but they're very picky about who they take and what they'll do, and it's, the rate's better, but it's a headache, and half the time you don't get your loans closed. So they don't do condotels, they have limits on condos for LTV. And most of these people are, like I said, they're most of the time, at least here in Florida, I've noticed since I'm here, that they're buying them to use themselves for a month or two, and then the rest of the time they Airbnb it. So they make good money off of them, especially here. So that's another thing on the DSCR. If you're doing a refinance on a DSCR, we will use the Airbnb income rather than the 1007. So you could so they've owned this property, and you go to, usually you can go to the Airbnb website, and you get a list of all the rents they've had for the last 12 months. So, and we do an average. So we'll just get that spreadsheet, we'll add them up, divide by 12, and that's how much we give them for rent.
Pretty simple.
Yeah. So a lot of times you'll find, especially here in Florida, that 6 months of the year they get these crazy, stupid rents, and then it may be empty a couple months in the summer, right? It doesn't matter. We just add it up and divide by 12. Now, on a DSCR, unlike with Fannie Mae, you do not take an expense ratio, right? So, on Fannie Mae, if you have a residence and you take 75% of the rents, we take 100%.
So it's all
So it's 100%. Now, on a Airbnb though, on that spreadsheet, there's fees that you're charged from Airbnb. So in that case, we take the net, but we don't do a 25%.
you take the full.
Yeah, we take the full amount. If the fees and stuff are not listed there, that's the only time on the Airbnb spreadsheet we'll take 75% of it. That's the only time, because we don't know what the fees were and so forth.
Okay. Well, I know you guys are hungry.
I could go all day. I want to mention one other thing, a product that we have that's let's say you're doing a loan that it's full doc and you can't get it to qualify Fannie Mae, right? But they have $1 million in their 401k. I'm just making up a round number. We have what we call asset utilization. So you could take that money that's in that account. They don't have to touch it, but we'll take, if they're not of age, you take 60%. If they're of age, that they can take it, you take 70% of it, right? So let's say they're 59 and a half, so you're going to take 700,000. If their DTI is at 60 or less, we'll divide that number by 36 months and add it as income to make the DTI work. If let's say the DTI is at 80, right? We'll still use that number, but we're going to divide by 60 months, so 5 years. So most of our competition only are 84 or 120 months on their calculation. If it's like stocks, mutual funds and stuff, we are only taking 20%. So most of them are taking 70. So we're very aggressive on that product. And I mean, I recently closed a $3 million purchase for a woman that had no job, but she had a bunch of assets. The other thing to note is most other lenders require a minimum of $1 million in assets. So with us, you have that same borrower that you were at a 60 DTI, but they only have 200,000 in their 401k. We'll still do it. We'll do it with the, and the same ratios and so forth. So it's a little niche. You know, our goal is to do good borrowers, right? Like I said, most of our borrowers either, if they don't have good credit, they have a lot of LTV, right? So it's a refi where they're low LTV, and they probably have some reserves or money. So if you have good credit, money, or low LTV, if you have two of those three, you're going to get a loan, right? It's the guy that has a 550 score and he has no money and he needs 90 that they get turned down, right? So that's the best way to think about non-QM loans.
Perfect.
Do you guys have any questions for us?
Perfect. If you guys have questions, please come see me. My office is right around the corner. Hablo español. Yo sé que ellos no hablan español, pero voy a tratarlo. Gracias.
Yes, thank you.
Thank you for having
we,
us.
we got lunch for everyone. Have some lunch. Do you want to tell them?
Good.